In the previous video, I talked about privatization and its basic advantages and disadvantages. But in this video, I'll talk about some real life examples of privatization in our country and why privatization is needed. Many people, including the opposition parties, say that privatization is an attempt to sell the country in the hands of big private players, but this argument is clearly wrong. In the past, disinvestment was considered usually for budgetary considerations. The government would want to get rid of perpetually loss-making enterprises. Few of these would find buyers. Repeated efforts with Air India sale have failed, but other than loss-making enterprises, the government had no problems with PSUs competing with the private sector. This time the government is acknowledging that it has no general role in business. Government participation in the market should be the exception and not the norm. With the government out of the business of business and no PSU in an industry, the private sector can be more confident of not being driven out by a competitor that has no constraints on the access to capital. This principle may contribute to increased investment from the private sector. Private sector companies face unfair competition from the presence of PSUs. Unlike the private sector, where capital is limited, PSUs have a virtually infinite source of capital, the tax revenues of the government. Further, the cost of capital for PSUs from the market is also lower as they enjoy an implicit government guarantee. Competing with such a giant is fraught and risk for the private sector. All private airlines in India have to compete with Air India that has accumulated losses of rupees 70,000 crore and outstanding debt of rupees 58,000 crore. Jet Airways, however, went out of business with less than half the size of that debt, at rupees 25,000 crore debt only. Another problem arises from the conflict of interest. Where there are PSUs, the government acts both as a player and a regulator in the market. The government will always be tempted to tilt the rules in favor of the PSUs. We often see that this is the case of PSU banks, which get favorable treatment from the government and the Reserve Bank of India. Disinvestment was given a boost for the first time when Atal Bihari Vajpayee led NDA government came to power. Before that, Congress Prime Minister PV Narasimha Rao had started the disinvestment of some of the state-owned companies by selling minority stakes sales, but it was Vajpayee who took the border stance of privatization of public sector companies entirely called strategic sales. It was also the first government to set up a separate disinvestment ministry. The Vajpayee-led government privatized as many as 12 public sector companies during their tenure, including big ones such as Maruti Udyog, Hindustan Zinc, Bharat Aluminium, Videsh Sanchar Nigam Limited, among others. How these companies have fared post-privatization? Let us see. Two of the major public sector companies privatized within the Vajpayee administration, Hindustan Zinc and Bharat Aluminium, were taken over by Anil Agarwal-led Vedanta Group's lead company Vedanta Limited. Hindustan Zinc posted a turnover of rupees 1,418 crore amid 2001 and 2 and has presently developed 17 times in as numerous a long time post-privatization. The company has posted a turnover of over rupees 24,000 crores amid 2017 and 18. Additionally, Balco under the same group has developed to over 9,000 crore turnover in 2017-18, according to the financials recorded by the company with ROC. Similarly, in May 2002, the Vajpayee government approved disinvestment in Maruti Udyog and selling it to Japanese automaker Suzuki Motors. In the first phase, Maruti Udyog issued rights issue of rupees 400 crore with the government renounced its right shares to Suzuki. Suzuki paid rupees 1,000 crore to the government as control premium to gain management control in Maruti. In the second phase, the government sold its existing shares through a public issue and exited completely in 2006, and the company was renamed as Maruti Suzuki India. The company posted a turnover of rupees 88,581 crore during 2018-19. India's salt to software conglomerate Tata Group also took over two of the public sector companies, CMC and VSNL. CMC Limited had recorded a turnover of little over rupees 500 crores before getting privatized and has doubled its revenues by 2013-14 to rupees 1,339 crores before getting merged with the parent company TCS in 2014. Similarly, VSNL was also sold to Tata Group for rupees 1,439 crore and was renamed Tata Communications, had posted revenue of almost 8,000 crore during 2001 and 2002. However, the company's revenue only increased two times to around rupees 17,000 crore in 2017-18. Among other disinvestments through strategic sales, modern food industries, an FMCG company producing bread, cakes, cookies was sold to Hindustan Lever, now Hindustan Unilever in 2000. In 2006, HUL merged the company with itself but always found the company to be a misfit with the company's culture. It referred MFIL to Board of Industrial and Financial Reconstruction and subsequently sold the company to Singapore-based Everstone Capital. Indian Petrochemicals Corp (IPCL), Pradeep Phosphates and Jessop and Co. were also privatized by the Vajpayee government. Jessop and Co., a Kolkata-based engineering company, was taken over by Rui Group. IPCL was bought by Reliance, while Pradeep Phosphates got sold to Suraj Podar-owned Advantage Group. As we can see from these above examples, many times privatization has been successful and many times it has not. Let us analyze whether it will be successful this time or not. Let us take the example of Air India. It has been quite a long time since the government announced to sell Air India, but not many people or companies have shown any interest in buying it. Let us look why. The government initially offered to sell only 76% stake of the airline, but the interested parties feared political obstructions and government prying because of the government holding about a quarter of stake. But after seeing the close to none response of bidders, the government finally decided to sell 100% of Air India. Secondly, Air India is heavily debt-laden and regularly incurs huge losses. The total debt, including current liabilities, stood at rupees 33,392 crore as on March 31, 2017. By March 2018, the figure crossed rupees 50,000 crore as reported by Money Control. Despite the enormous investment flowing from the bidders, it may take several years to turn the carrier around. CAPA further estimates that over the 2 years, Air India could be headed for cumulative losses of $1.5 to 2 billion if the disinvestment process is not executed successfully. But also, for the same reasons mentioned earlier, the government is trying to give some relief on this too. Reportedly, the lack of transparency on the employee retention clause by Air India may have also hindered bidders. A number of unions protested against Air India disinvestment. Bidders weren't ready to deal with staff that they couldn't lay off. In March, Business Standard quoted an official as saying, "Employees cannot be asked to resign. While the private player will be given full independence in taking strategic decisions, employee will be asked to be retained for 1 year." Air India, including its subsidiaries, has more than 20,000 employees on its payroll. Air India also fails to top the market share or passenger load in domestic operations. As per a Directorate General of Civil Aviation report for 2018 April, Indigo retained the highest market share of scheduled domestic airlines at 39.7%, carrying 1.34 crore passengers, followed by Jet Airways at 14.7%. Air India holds only 13.3% market share with just 45.6 lakh passenger load. The traffic data report updated by airlines for the month shows maximum complaints against Air India at 263 per 10,000 passengers carried, which have not entirely been addressed by the airline. A hike in crude prices has added to these hurdles, with fuel prices heading north. Higher fares and thus lower passenger load are likely to follow. For Air India's disinvestment plans to fly, the government has to rethink its strategy. Thus, we see from this example of Air India that it will not be a piece of cake to sell the PSUs because many of the big companies have also the same problems as with Air India. Private banks' market share in loans has risen to 36% in 2020 from 21.26% in 2015, while public sector banks' share has fallen to 59.8% from 74.28%. Competition heated up after the RBI allowed more private banks since the 1990s. They have expanded the market share through new products technology, and better services, and also attracted better valuation in stock markets. HDFC Bank, set up in 1994, has a market capitalization of rupees 8.8 lakh crore, while SBI commands just 3.50 lakh crore. India has 22 private banks and 10 small finance banks. However, in the last couple of years, some questions have arisen over the performance of private banks, especially on governance issues. ICICI Bank MD and CEO Chanda Kochar was sacked for allegedly extending dubious loans. Yes Bank CEO Rana Kapoor was not given extension by the RBI and now faces investigations by various agencies. Lakshmi Vilas Bank faced operational issues and was recently merged with DBS Bank of Singapore. Moreover, when the RBI ordered an asset quality review of banks in 2015, many private sector banks, including Yes Bank, were found underreporting NPAs. Former Axis Bank MD Shikha Sharma too was denied an extension. This shows that while privatization may be a good move for other types of PSUs, but for banks it may turn out to be a bad one from the point of view of a depositor.